Welcome to my channel. And let me ask you a question that may decide your financial future. When the stock market falls, do you panic like the crowd? Or do you prepare like the wealthy? Right now, screens are red, headlines are loud, and fear is spreading faster than facts. People are asking, why is the stock market falling? But very few are asking the smarter question, what should I do when it falls? Stay with me till the end, because what you're about to hear can protect your money, sharpen your mindset, and turn uncertainty into opportunity. The market is not falling because it hates you. The market is falling because it is doing its job. The stock market is a reflection of expectations, emotions, global money flow, and economic reality. When expectations change, prices change. Simple. But most people complicate it with rumors, WhatsApp tips, and emotional decisions. Smart investors don't react to noise. They respond to signals. One major reason markets fall is foreign institutional investors. FIIs understand this very clearly. FIIs control massive pools of global money. They don't marry one country. They date opportunities. When interest rates rise in the US or global risk increases, FIIs pull money out of emerging markets like India and move it to safer or higher yield assets. This selling creates pressure and markets fall. Does that mean India is weak? No, it simply means global money is repositioning. Temporary pain, not permanent damage. The second real reason is inflation and interest rates. Inflation is the silent killer of wealth. When inflation rises, central banks raise interest rates to control it. Higher interest rates mean borrowing becomes expensive, corporate profits get squeezed, and future earnings look less attractive. Markets are forward-looking. They don't wait for damage, they price it in advance. That's why you see markets falling even before results turn bad. This is not a crash, this is a correction, with logic. Third, global uncertainty. Wars, geopolitical tensions, oil prices, currency fluctuations, policy changes. Markets hate uncertainty more than bad news. Bad news is clear. Uncertainty is dangerous. When global risk rises, investors move to cash or safe assets. Equity markets fall, not because companies suddenly became useless, but because fear temporarily takes control. Remember this. Fear is always louder than fundamentals in the short term. Fourth, excessive valuations and profit booking. When markets run too fast for too long, reality catches up. Some stocks become overpriced, driven by hype instead of earnings. Smart money books profits. Weak hands panic prices correct. This is healthy. If markets never fell, they would be casinos, not wealth-building machines. Corrections clean the system and create space for sustainable growth. Now let me talk to you about SIPs, because this is where most people either win big or make a lifelong mistake. When markets fall, people stop SIPs. This is financial suicide. SIP is not about timing the market. It's about time in the market. When prices fall, your SIP buys more units. More units at lower prices mean bigger gains when markets recover. Market falls are discounts, not disasters for long-term investors. Understand one powerful truth. The biggest wealth in the stock market is created during fear, not during excitement. The problem is, fear doesn't feel like opportunity when you're inside it. That's why mindset matters more than market timing. Average investors ask, what if it falls? More smart investors ask, what if this is the price I'll never see again? Let me be very direct. If your goal is short-term trading and you don't have risk management, falling markets will punish you. But if your goal is long-term wealth creation through quality businesses and discipline, SIPs, falling markets are your best friend. The stock market transfers money from the impatient to the patient. Decide today which side you want to be on. Look at history. EV, Remajor Fall 2008, 2020, and many others felt like the end of the world at that time, but those who stayed invested, those who continued SIPs, those who focused on learning instead of panicking, created extraordinary wealth. The market rewards discipline, not drama. Now here is where you must be careful. Don't blindly buy everything just because prices are down. Focus on strong fundamentals, good management, consistent earnings, and long-term growth sectors. Avoid debt-heavy companies during high interest rate cycles. This is not gambling. This is strategic investing. Let me challenge your thinking. If markets going up made everyone rich, everyone would be rich. The reason most people fail is not lack of information. It's lack of emotional control. Fear makes you sell low. Greed makes you buy high. Education makes you calm. Discipline makes you wealthy. If you are young, market falls are gifts. If you are experienced, they are reminders to rebalance. If you are scared, they are teachers. The market doesn't test your intelligence, it tests your patience. Now listen to me very carefully. Do not invest based on headlines. Headlines are designed to create emotion, not wealth. Invest based on understanding. Learn how FIIs think, how interest rates work, how assets compound, and how cycles repeat. Once you understand the game, the fear disappears. This is the moment where winners are separated from watchers. 6 months or 2 years from now, people will say, I wish I had invested when the market was down. Don't be that person. Be the one who acted while others hesitated. If this content is helping you think clearly instead of emotionally, then don't just watch, act right now. Like this video, so it reaches more people who need clarity, not confusion. Subscribe to the channel because this channel is not about hype. It's about habits that build wealth. Share this with someone who is panicking today, because one right message at the right time can change a financial life. And most importantly, comment below and commit. Are you stopping your sip or strengthening it? Write it down. Public commitment builds private discipline. Remember, markets fall to test you, not to destroy you. Wealth is not created by predicting markets, but by preparing yourself. Stay focused, stay invested, keep learning, and stay connected with this channel. Because the real growth is not just in the market, it's in your mindset.